So again, when we talk about joining trend lines, they don't always have to be as amazingly accurate as people think. You can draw these in with the naked eye. Now, as long as they're going to hit 2 or 3 points along that support line, along the bottom of these peaks, then you can call that a level of support. So again, people can get quite fussy, I suppose, that that you have to have X amount of points hitting a level of support for it to be valid. And that's fine, but remember, you're trading against other people. You're trading against other people that are looking at these charts, drawing their own conclusions and drawing their own lines in. So you have to make sure that, again, we're following the market sentiment. That when we say about the trend is your friend and the market is a self-fulfilling prophecy, if we find a perfect level that nobody else has ever seen, then who else is really going to be trading that level? So it's always good to put in levels of support that other people have identified and other people have seen that there's value. So again, we do see some breaks through these levels of support, but generally what we see is a bit of a wave and a sideways movement and a bouncing action. That we're seeing that below that point, there are no sellers really willing to push it any further. So what we're doing is we see at that point that weakness comes into that particular downward move. We see it bounce up, and there are more buyers willing to buy these up at that particular point along that level of support. So again, it's just everything is valid. It just depends how you look at it. So again, we can use a similar example for this red line as a line of support. So okay, towards the beginning of the graph, we see head and shoulders build up, but mainly after that, we break through, we hit our level of support, the blue line, and then we look for the market to hit the level of resistance. And we do see some small breakouts, but in the main, that when we do start to come back into the red line, it gets forced straight away back down to that level of support. So instead of just identifying that we could maybe trade once, twice, 3 times, in all fairness, every time we broke above this red level or came back in, that could be 5, 6, 7, 8, 9 times that we could then sell into weakness. And then again, we know exactly where the market's going to go to, a level of support, so we can hold on to that until that's tested. So that just shows that a sideways market, although it's got no particular direction, that could be 5 or 6 times on the upside we could sell into it, and then 5 or 6 times on the downside we could buy into this particular trend. So we could have traded 12 times and 12 opportunities that we know where the market should go to. So again, it's quite important that we don't discount sideways markets and just think that, well, if it isn't going up or it isn't going down, we can't make money. You can always make money in markets if you understand the points we're moving between. So this is very important. We can establish levels of support and resistance and make sure we understand where the market's going to go and therefore trade in the correct way. So again, what we see at the end of this particular cycle towards the end of June, we see a break up through this level of support, and it doesn't really ever look back. So that means we've started a new kind of trend. Now again, it's not really a perfect upward trend. It's more that we see a spike up that could have been due to maybe some fundamental news, or we could have had, I don't know, maybe there was a takeover or some record profit earnings. And then again, we do see a spike up, we see another kind of peak hit, and then we come back to within a range. So again, that's just a higher level of price trading in the same kind of style. So that really is going to bring us on to our next quite nice point that can support equal resistance. So again, these are always points of attraction. Once they've been classed as levels of support, once they're broken through, doesn't mean they're not useful anymore. They can equal resistance. Okay, so we can indicate this quite clearly by these AT&T shares on the next chart. So as we see, a similar sideways movement that we saw before. Doesn't matter about the time periods, we're just looking at the graphs. And we can draw in, again, 2 quite good parallel support lines and resistance lines. So again, our blue level of support towards the beginning, we do see a breakthrough. But then after that, we see that 1, 2, 3, 4, 5, maybe 6 points along this blue line. We see support come into the market, and it's pushed. The buyers push it up towards the top end of the level of resistance. And again, we see that is now a good trading channel, that we can pick our points of exit on the low points. Oh, sorry, our levels of entry on the low points and our levels of exit on the high points, and vice versa, because we don't see any sustained breakthrough on this sideways movement. What we do see when we do actually come to the end of this trading particular channel, when we do break through the level of resistance, that red line there, that we see that the price action changes, and then we do see quite a sharp upward movement. But then we do see the market break straight back down. And where does it head to? Well, our lowest point suddenly bounces off that level of resistance we'd initially identified. So that red level of resistance has now become the new trading level of support. So again, we see some nice areas to buy in this new higher trading and price bracket. So again, it's always worth keeping a note of our levels, even when they've been broken, because there still will be levels of interest to people. So once people have drawn a line in, they do get quite attached to them. So even when they are broke through, they're still valid, and it's always worth keeping in mind your levels of support and resistance and writing them down, because they will get hit at some point again. This is just the market moving waves, and they go up and they go down. So markets are always looking for information that we've had before. So again, it's all about building up your charts and just keeping a wide enough breadth of information to know what's happened in the past, and now, therefore, what could happen in the future. So that new term is when we see that the resistance line is broken. We call that a breakout. So it's broke out of that particular trend, and it's formed a new sideways movement above, and where our level of resistance was, that is our new support. So support and resistance summary, okay? So it's important to identify support and resistance levels. Although they're not always accurate in breakdowns and breakouts can occur, they're useful at limited losses, okay? So it's just another way to look at it. It's giving you a point of attraction. That's how I look at them. They're a level of interest, and they're making the markets move. And it doesn't matter if it's on the upside or the downside, they will still be relevant as long as other people have looked at them before. Alright? So the benefits, okay? Securities do have a tendency to stay within support and resistance, but for periods of time. This is just the way the markets move. Right? Remember, I have a lot of people trading a lot of different types of information. So support and resistance lines are key. They will always, the drawbacks are, they will always at some point break out. But this doesn't matter. As long as, we've traded enough opportunities and banked money, when they do break out, we can identify it's a breakout. We can therefore go with the trend, go with the momentum. Yeah, it's just identifying the right trend, the right trade at the right time, and then going with it. That's the whole point of trading with the trend, identifying which trend you're in. There's no point trying to buy in a selling market and trying to pick these great levels of support when they're getting broke through. And that's not intelligent trading. So again, it's just trading with the right type of trading environment and making sure we're identifying it. And that's what we're going to do by drawing our levels of support and resistance and then trading the charts against that. So trend lines, as we said, when two or more points are connected, then that really creates a trend line. Okay, so we can use this to predict future prices. Okay, so it's one of the primary tools when we're looking at bear or bull markets to understand what type of market we're trading in. So uptrends. So this is when we see two low points on a chart connecting. Yep, and this really is showing an uptrend. So it'll be from a low point on the left-hand side to a high point on the right-hand side. So we can, again, easily indicate this with some Apple shares. So on the low left-hand side, okay, it's back from 2006-07. We see we can draw a trend line here. This blue line connecting two, maybe 3 points, roughly again a 45-degree angle, and that's showing as we're in an upward trend. So any point along that blue line, we're going to find fair value, be able to buy, and the market should rise from that point. Now again, a little bit further on, we see that we could draw a steeper blue line, which is a steeper line of support. Now it's not to say that's not as valid, but we see that it isn't quite as neat. Okay, so we do see some breakthroughs, and it is quite a bit of a sharper angle. So the sharper the angle, the faster the price is going to move. But the faster it moves also means if it does break through this steeper angle, the quicker it's going to break through. And at the end of that blue line, we see it broken through, and we do see a sustained buying action come into the markets. But again, if we've bought mainly along these blue lines, we've not taken on too much downside risk, and the markets have risen from there. They're good opportunities to buy. So we've identified as a bull market, we've identified levels of support, we're buying along there, and we're buying low, selling it high, and making money. Yeah? So that's trading. That's what it's all about.